Dinar Shift. The financial world is abuzz, and the reason is an unexpected move by one of the largest banking institutions in the United States. We are tracking a major development that could significantly impact all dinar and dong holders, as reports confirm that Chase Bank has implemented a sudden and notable restriction on foreign currency exchange activities, specifically concerning the Iraqi dinar. This isn't a mere procedural change. Whispers from inside the community suggest this is a deliberate and calculated step, sending a compelling signal across the entire currency landscape. The central question reverberating through the market is starkly simple. Why would a global banking titan suddenly place a hard limit on transactions involving the Iraqi dinar? And what does this action truly signify for the long-anticipated revaluation event? We are launching a deep investigation tonight to analyze the facts, dissect the possible motivations behind this move, and outline what it could mean for the future of the dinar in the international marketplace. Stay with us as we piece together the evidence, because the closer we look at this restriction, the clearer the roadmap to a massive financial shift becomes. The initial tremor began when keen-eyed members of the foreign currency exchange community noticed an anomaly within Chase Bank's internal digital systems. The Iraqi dinar, a currency long relegated to the background of major bank listings, suddenly reappeared under live exchange options. However, this relisting was not a simple return to form. It came with a distinct and unprecedented ceiling on the amount that could be exchanged per customer. The news spread instantly through online forums and private networks, sparking an immediate frenzy of speculation and inquiry. Why the sudden activation of this exchange feature in one of America's banking giants, and critically, why introduce a restrictive daily or transactional limit on the amount of dinar that could be converted? These two variables together, reappearance and restriction, have created a puzzle that we are determined to solve, as they suggest a level of preparation previously unseen. Reports from multiple sources within the community indicate that the new system now enforces a financial cap for individual clients looking to exchange the Iraqi dinar. While the precise figures vary, with some estimates placing the limit near $1 million USD equivalent, the consensus remains that a definitive restriction has been put in place. The exact amount may also be dynamically adjusted based on the client's relationship with the bank, such as whether they are a standard retail account holder or a high-net-worth private client. The core fact remains, a significant internal protocol adjustment has occurred within Chase's robust network. This is not a local branch policy, it involves a major system-wide update. When an institution of this scale quietly recalibrates its foreign currency apparatus, it is seldom an accident. It typically reflects an impending operational requirement or a significant external monetary development that demands preparedness. The importance of this event is amplified by the sheer size and connectivity of Chase Bank within the global financial architecture. This institution is not just a commercial bank. It stands as one of the largest financial players in the world, with direct ties to high-level operations of the U.S. Treasury and the Federal Reserve System. Any adjustment or internal testing of a currency's exchange parameters by Chase often serves as a powerful, albeit unofficial, indicator of preparations for a wider shift. Banks of this magnitude do not allocate precious operational resources to setting exchange limits on a currency that is not poised for a significant change in international standing. Therefore, the essential question for every dinar and dong holder is whether Chase is now proactively gearing up for an official exchange rollout directly linked to Iraq's anticipated revaluation, or if this represents a controlled internal stress test of liquidity management before a much larger public financial event. Regardless of the internal designation, the timing is deeply compelling. The theories currently circulating among financial insiders and experienced currency observers are both numerous and insightful, with many pointing toward a logistical need for control. One highly plausible perspective suggests that this transactional cap is an essential component of Chase's contingency plan for liquidity management, anticipating the moment of an official revaluation. Consider the massive potential scale. If the Iraqi dinar or Vietnamese dong were to experience a substantial increase in value, and millions of private holders suddenly attempted to convert their currency simultaneously, the resultant surge of liquidity could overwhelm global banking systems. By establishing preemptive limits, banks can protect their digital infrastructure, carefully regulate cash flow, and ensure that each major transaction is processed, verified, and secured in an orderly, phased manner. This is less about preventing the exchange and more about managing the inevitable rush in controlled stages. If this liquidity management theory holds true, it suggests a profound shift in the banking sector's internal posture. It would indicate that major financial institutions are not just vaguely aware of the potential for a currency revaluation, but that they are actively operationally preparing for its arrival. This level of internal readiness speaks volumes about the perceived proximity of a significant event. However, it is crucial to remember that this narrative has a secondary, often overlooked, dimension that holders must heed. Several respected figures who track the dinar market have issued a cautious, unified advisory: do not rush the exchange process when the revaluation is announced. They suggest that the initial phases of the exchange could involve fluctuating rates and that a patient approach may yield a superior financial outcome. The warning is based on historical precedent and practical financial wisdom. When a currency undergoes a major change in value, the transition is rarely instantaneous or universally uniform across all exchange points. There may be different exchange phases, and it is highly likely that not every bank will immediately offer the final, stabilized international rate on the very first day. The critical implication is that those who race to be the first to exchange their holdings might inadvertently receive a less favorable rate than those who demonstrate strategic patience. It's an exercise in financial discipline. Waiting a short period could potentially result in a stronger return on the exchanged currency. This is why experts are consistently advising holders to closely monitor the market, seek official verification of the fully stabilized international rate, and then act with measured deliberation rather than emotional haste. It's important to understand why Chase Bank might be the institution at the forefront of this internal testing and restriction implementation. Historically, this bank has often been one of the first major U.S. financial entities to integrate and reflect foreign exchange updates tied to significant global monetary events. In past years, when the Iraqi government announced substantial new monetary policies and frameworks, Chase's systems were noted for being early responders, reflecting those changes internally even before broad public news confirmed them. This repeated pattern is not accidental. When a financial powerhouse chooses to relist a currency like the Iraqi Dinar IQD and imposes specific exchange controls on its back end, it strongly suggests that significant international settlement frameworks or major rate adjustments are currently undergoing operational testing behind the scenes. Another vital piece of the overall picture can be found within the borders of Iraq itself. Over the last year, the Central Bank of Iraq (CBI) has been diligently executing a comprehensive, full-scale modernization of its national monetary and banking structure. This effort includes integrating advanced digital payment systems, establishing stringent new rules for international money transfers, and forging closer operational ties with international financial institutions. The overarching, stated objective of these reforms is to elevate the dinar from a strictly national currency to a credible regional instrument for international trade and investment. To successfully achieve this ambitious goal, the currency must establish unquestionable stability, global credibility, and seamless accessibility within the world's major financial markets. This modernization and internationalization goal is where institutions like Chase, alongside peers such as Wells Fargo and Bank of America, become essential components. These large multinational banks provide the crucial digital and physical infrastructure that links Iraq's newly reformed financial system directly into the highly regulated global market economy. Therefore, the news of Chase reintroducing the dinar into its exchange system, even with transactional limits, should be viewed not as a mere banking rumor, but as a potentially visible early step in this immense international integration process. In this context, the exchange cap transforms from a restrictive barrier into an informative signal, indicating that the bank's processing system is now operational, albeit configured for a secure and strictly controlled rollout. The analogy of a soft launch before a grand opening is highly applicable here. When any massive, high-stakes financial system is deployed, it undergoes rigorous, quiet testing to ensure everything functions perfectly under stress before the official public announcement. The exchange cap acts as a volume control mechanism during this internal testing phase, ensuring that the system can handle real-world transactions without crashing or being overwhelmed. This preparatory silence from the bank is often misinterpreted, but in the highly guarded world of high finance, a lack of public statement is typically the norm for internal operational updates, not a sign of inactivity. It is entirely characteristic for banks to avoid publicizing internal currency tests or operational system updates. These are considered proprietary, back-office operational details, not consumer-facing marketing news. They generally only issue a public confirmation when the new exchange rates are fully authorized, active, and available for mass adoption. Therefore, the current institutional silence from Chase Bank is not, in itself, proof that nothing is happening. Rather, it could be interpreted as evidence that the rollout and integration phase is still strategically under wraps and proceeding, according to a controlled schedule. This follows the historical pattern of major foreign exchange rate adjustments, quiet internal system updates first, followed by formal, public confirmation once all necessary global banking protocols are in alignment. Considering the potential scenario of these exchange restrictions going live with an official rate, the utility of the limit becomes clear. Imagine the moment the dinar is declared fully tradable internationally. Chase, having been one of the first to update its infrastructure, would begin accepting exchanges, but only up to the specified per-account limit. This structured approach serves a dual purpose. It allows the bank to manage its liquid assets and carefully monitor the massive influx of transactions, preventing a system-wide failure due to an overwhelming demand spike. The initial phase of exchanges would logically be tiered, likely prioritizing private clients, verified institutional investors, and those with pre-vetted purchase documentation. Following the initial tightly controlled first wave, the exchange process would then gradually and securely expand to the general public. This carefully phased, gradual approach is designed to protect both the financial integrity of the banks and the interests of the individual currency holders by preventing market chaos. However, a key element of caution remains a central part of the insider warnings. Many experienced community figures predict that the first several days of public exchange activity could be marked by temporary and volatile rate fluctuations. The risk is that these early rates may not represent the final stabilized international value of the dinar, potentially meaning that those who rush to exchange their holdings might receive a comparatively lower value. This potential for rate volatility is the main reason why trusted voices within the currency community are urgently advising holders to maintain a high degree of composure. The consensus is building that a small, tactical waiting period could very well lead to a substantially stronger exchange rate once international markets have had time to fully process the event and find a true, stable equilibrium. This suggests that the ultimate success in this transition may favor strategic timing over sheer speed. What makes this Chase development particularly compelling is how precisely its timing aligns with Iraq's officially stated 2025 economic reform objectives. The Central Bank of Iraq has publicly acknowledged that it is nearing the completion of its international exchange integration phase, which involves testing the operational mechanisms with its major U.S.-based banking partners. The internal updates being observed at Chase Bank fit almost perfectly with this publicly disclosed synchronization phase. The convergence of Iraq's push for financial self-determination, the U.S. banking giant's system updates, and positive signals from global bodies, like the IMF regarding Iraq's currency transition, suggests a highly coordinated effort. The overall environment in the global financial sector is also contributing to the heightened attention on the Iraqi dinar. As digital banking technologies advance and global trade alignments evolve, currencies that have been historically undervalued, like the dinar, are increasingly coming into sharper focus. For years, Iraq's currency has not accurately reflected the nation's immense wealth, particularly its vast oil reserves and growing infrastructure. However, as Iraq continues to strengthen its economic independence and reduce its reliance on the US dollar for internal transactions, the stage is set for a new valuation that could more accurately represent the dinar's true purchasing power and economic standing. If Chase Bank is indeed already constructing the complex digital infrastructure necessary to handle this anticipated valuation shift, it strongly implies that the current timing is anything but a coincidence. It speaks to a strategic preparation for a geopolitical and economic event. For individual holders, this moment demands a measured organizational response. First and foremost, resist the impulse to act on unsubstantiated rumors or sensationalized speculation. Only verified systematic changes or official governmental pronouncements should be considered authoritative. The noise level is high, but the facts are the only reliable compass. Secondly, this is the crucial time to become meticulously organized. All dinar notes should be safely secured, their provenance verified, and all purchase documentation properly cataloged and readily accessible. This level of meticulous preparation will be essential when the time comes for a formal exchange process. Furthermore, it is prudent to widen the scope of banking research beyond just one institution. Investigate the potential procedures and timelines, not only at Chase, but also at other major U.S. banks like Wells Fargo, Citibank, and Bank of America, as each may employ slightly different protocols for such a significant foreign currency conversion event. A critical step is to prepare all personal and financial documentation, ensure that government identification, proof of purchase for the currency, and all necessary account details are current and easily retrievable. This proactive readiness ensures that when the exchange process officially begins, a holder is not delayed.